So in this video, we are going to see about 10 small caps that mutual funds bought despite the market condition is so weak. The first stock that we're going to see is Metropolis. If we take a look about the stock, the current market price of the stock is 2008 and it has a market cap of 10,274 and the stock P ratio at 45.9 and ROC at 36.2%. When we take a look at the pros, we have around like 5 pros and 2 cons for it. It's almost dip free and is expected to give a good quarter. The company has also delivered a good profit growth over the last 5 years and it has a good return on equity as well, and they are maintaining a healthy dividend payout, so that is the main important thing. But the cons is it is trading at 12 times of its book value and promoter holding has decreased over last quarter as minus 0.83%. Here we are going to cover about these 10 small caps and its respective mutual funds that held these stocks. First we will check about the Metropolis. As we could see that from our analysis, we have around like 46 schemes that held the stock Metropolis. The important metrics to look around for a better mutual fund purchases, the alpha should be greater than 0. If you want to know what is alpha, we can see that the alpha is excess returns relative to market benchmark for a given amount of risk taken by the scheme. You might have seen like your mutual fund scheme has outperformed the benchmark. That is nothing but the alpha. So it should be greater than 0. And the beta should be close to 1 or less than 1. So want to know about the beta, it just describes about the volatility of the scheme relative to its market benchmark. Usually the beta of the scheme is more than 1, the scheme is more volatile, and if it is less than 1, it is less volatile. Sharpe and Sortino. It is used to evaluate the risk adjusted performance of the mutual fund. A good Sharpe ratio should be greater than 1. So we have to choose the mutual fund whose Sharpe ratio is greater than 1. And Sortino. So with respect to Sortino, it just takes an assets or portfolio's return and subtracts the risk-free rate, then divides the amount by assets downside deviation. So it includes some statistical formula of subtracting the risk-free rate and the amount by the assets downside deviation. To make it precise and short and simple, as a rule of thumb, Sortino ratio should be 2 and above. Now let's focus on the Metropolis stock, and yeah, we have generated the Excel sheet for the same. Let's take a look around this. So as you could see, like Metropolis has been held by 46 schemes, as I mentioned before, and we could see that the alpha is 8.57, which is the highest among the 46. That is for the BNP Paribas India Consumption Fund, and we could see that Edelweiss Arbitrage Fund has the highest Sharpe and Sortino, so it is good to go, and even the NAV value seems to be pretty low. It is a good sign to buy this scheme, and the benchmark that belongs to us is Nifty 50 Arbitrage, and the beta is highest. So here in this case we should look around, the beta should be less than 0. So yeah, here you might have a question like, even though the Sharpe and the Sortino seems to be meeting the acceptance criteria, we have the beta greater than 1. Then what should be the call on this? Yeah, when the Sharpe and the Sortino ratio is greater than 1 or 2, we can ignore the beta metrics for this. but for the other cases we have to include the beta value. So here in this case it doesn't meet the criteria, but we have to take care of the beta. It is greater than 1, which is more volatile to the market. So we have to choose the beta which is very less. So here the white ones are very less, 0.39, so which is very low, the beta value. Let me just freeze this pane for better understanding. Yeah. So the beta is 0.39, and Franklin India Pension Direct Plan. So the NAV value is 168, and the standard deviation seems to be low, 7, which is a good sign. And the alpha is 0.69. So it's like it would outperform the benchmark only by these many percentages. And the Sharpie and Sartino are below par. And the total companies holded is 42. And the next one is Aditya Birla Sun Life FlexiCap Fund. This one among the 46 schemes has the highest NAV value. And even for the Sun Life Equity Savings Fund, we have the beta of 1.33. And Sun Life Small Cap Fund has the highest standard deviation among all the thing. So standard deviation can be around like between 10 to 15 is okay to enter into the scheme. So even this is a good one. We have a standard deviation of 17. It's not a good sign. I'm sorry, it is a good sign. And we have a NAV value of 19. The beta seems to be below 1 and it's below 0.70. It is a good one. Sharpie and Sartino, it is greater than 1, and since the alpha is greater than 1, these two are acceptable. And the total companies holded is 46, and the returns is 21%. So this is a good call, and we can straight away step into this fund and start investing. And even the NAV value seems to be 19. That is a good sign. Yeah, then moving upon to the number of companies holded, the Motilal Oswal Nifty 500 tops this chart. We have 500 funds under this, and it comes under the benchmark Nifty 500 TRI. The maximum returns among all the 46 funds is UTA Small Cap Fund. We are yet to get the metrics for these the black ones, as because these are new to the market. As we can see, the NAV value seems to be below 20. They are just new to the market. The metrics are yet to get calculated. These metrics are calculated based on the previous historical performances. So since we don't have enough data to calculate, we are stating this as NAN. Yeah. So these are all the metrics for Metropolis Healthcare. So the next stock is Century Textiles. We'll just run this. So from our analysis, we have around like 28 funds that holds this Century Textiles, and I am rerunning the Excel sheet for the same. So the sheet has been generated. Let's take a look around. Yeah. So we can see that we have the 28 list of funds, and the standard deviation is 32 for this one quant small cap, and the alpha seems to be 14, which is a good sign. And beta is less than 1, and the Sharpie and Sartino, it's okay as because the alpha has exceeded its value. So it is a good, this fund is a good work. So this fund is a good one. And taking Canara Robeco Conservative Hybrid Fund has a good Sharpie and Sartino ratio. And the Aditya Birla Sun Life FlexiCap Fund has the 1208. We have seen previously for the Metropolis as well, this fund has come into the picture. And Templeton India Value has the beta of highest beta 1.14, which is not a good sign. And moving upon, the same Nifty 500 TRI, we have the Motilal Oswal Nifty 500. The highest return is Nifty in Nippon India Nifty Small Cap 250, 53%. The NAV value is 18 for it. It is a good one to enter into it, but still we are yet to calculate the standard deviation and alpha beta value for the same, as it is new to the market. But if we want to know what would be the price of this, we can compare with another small cap fund. So if you take another small cap, Yeah, Nifty small cap 250. We can see that these two are the right example for the below ones. So we have a 25 percentage the standard deviation and 11 for the alpha, zero point 0.8 for the beta and 1.13. So we can expect the same for the below small cap funds. Yeah, that's it for Century Textiles. Take a look around about the Century Textiles stock metrics. It is trading at 866 and the market cap of 9,600. Stock P is bit high, 134, and ROC is bit low, 0.75. And it has two pros and one cons. So it are expected to give a good quarter, and company has a good return on equity track record. 3 years ROE is 64.54, and the cons is company might be capitalizing the interest cost. So they are having a good sales like from 940 to 1114. So the net cash flow has been a bit reduced from 128 to 4, and the debtor days has been increased from 19 to 22. So these are all the just fundamental analysis for the Century Textiles. Aegis Logistics. So the next stock, yeah. So speaking about Aegis Logistics, so it is trading at 204 and market cap of 7160. Stock P is at 21 and ROC at 16.6. It is a good numbers, and they have been maintaining a healthy dividend payout of 36.84 percentage. Moving up onto the cons, they have delivered the poor sales growth and low return on equity for at 11.79. Company might be capitalizing the interest cost. Let's take a look around what are all the schemes that held this Aegis Logistics. So as I did before, I'm just rerunning for Aegis Logistics. So it has been holded by 20 schemes from our analysis, and I have generated the Excel sheet for the same. So I'll just take a look around. So as you can see, like it has been holded by 20 schemes, and the alpha is 19 for Quant Infrastructure, and the beta seems to be low, and Sharpie and Sortino are good. So I think this Quant Infrastructure is a good fund, and it has a good numbers over it. 37 companies have been holded, and 16 percentage is a good numbers for 3 years returns. The tax plan has a highest Sharpie ratio of 1.29. Small cap fund has a standard highest standard deviation 32, which can be ignored. But the alpha and beta Sharpie seems to be good. I think the NAV is 135, which means like it is some aged fund close to 9 years. And Quant Active Fund has the highest NAV value of 427. Even though the NAV value is 427, they are maintaining the standard deviation at 23. So we can take a call from these two funds whether to step into this or into this. So this is a good number. The alpha is 13 and the beta is 0.96, and we have a better Sharpie and Sortino ratio when compared to these two funds, this one. And the highest Sortino ratio among all the 20 funds is Quant FlexiCap. It is 1.64. Good standard deviation, good alpha. Beta is pretty low, 0.89, and the Sharpie is fair. And finally, L&T Business Cycle Fund has the highest beta among all the 20, which can be completely ignored. Even the alpha down perform the benchmark. And the Sharpie and Sortino are very low. So which means like this is not a these are all the not good numbers to enter into this fund. And the returns, when coming to returns, Quant ESG equity fund has a highest of 61 percentage. It is new to the market. We need to still wait for some more years to see this return is stabilized or not. And as usual, yeah, Motilal Oswal Nifty 500 has the highest number of companies, 500 companies. The NAV value is 16. So these are all the metrics for Aegis Logistics. HFCL is nothing but Himachal Futuristic Communication Limited. It is trading at 73.2 and stock P at 29.9 and ROC at 19.7. Good one. Market cap of 10,000 crore. And it has two pros expected to give a good quarter, and the median sales growth at 26.42. Cons, we have multiple cons. The debtor days has been increased, so it is an important uh, data point to look around. So 215 days is bit high. It's very much high. The average debtor days should be less than 60, so that is a good call. The dividend payout has been low for the past 3 years, and they have delivered a poor sales growth. Fundamentally, this stock seems to be like a 50-50 kind of call. I'm just rerunning it. So total of 14 schemes that has been involved in it, and the Excel sheet has been generated. Yeah, yeah. Quant infrastructure seems to be bit good. We have seen from the Aegis Logistics as well. 19 alpha and 0.97 is the highest beta among all the uh, 13 funds, which is 14 funds, which is a good one. Beta hasn't exceeded its threshold. So we can take a look around all the funds under this, as the beta as is not as much volatile to the market. The NAV value is a bit high, and 232, which is an old fund, standard deviation is good, alpha is good. Sharpie and Sortino, yeah, good numbers, 1.29 and 1.58. And moving upon, small cap fund has the highest standard deviation, and active fund has the highest NAV. Sharpie is highest for absolute fund. Am I right? Yeah, absolute fund, and Sortino is for Quant FlexiCap. As usual, highest returns, 61% returns for Quant ESG. As usual, Motilal Oswal Nifty 500 as the highest holding number of companies that has been held. So 53.2 is the current market price, and market cap is 6655, and stock P at 24.3 and ROC at 9.14. Delivered a a good profit growth, and has much cons. Company is reporting repeated profits but not paying dividend, which is not a good sign, and it has a low interest coverage ratio. The earnings include other income, so we have to take a call, like they are having a good profit and they are also having a good income of this crore, and they're not paying out the dividend. We need to find the reason of what is happening inside, and it has a low ROE of 10.87 for the last 3 years. Yeah, as usual, fundamentally it is a 50-50 call. Let's take a look at the funds that has holded. Total of 28 funds, and the Excel sheet has been generated. So Nifty small cap 7.95 is the highest alpha among all the 28. So most of the funds seems to be like mid cap, small cap, 500 TRI. Yeah. And the Sharpie and Sortino seems to be 1.06 and 1.66 for this fund. Income generation, Nippon India retirement income generation. Standard deviation is 5 and alpha is 2. Usually when you take a look around the Chrysal, the securities fund, we can see this average of numbers. Standard deviation would be very low, and the alpha seems to be low. It won't be that much volatile to the market, and it would just outperform only by few numbers. The beta would be very low. The Sharpie and Sortino, we can see it at close to 1.5 and 2. And with respect to standard deviation, banking and financial services fund under the AMC of Nippon has the highest standard deviation of 35.6, and ICICI Prudential Multi-Cap Fund has the highest NAV value of 464 among the 28. And we can see the highest beta value is for Nippon India Multi-Cap Fund. Even the numbers are pretty bad for this. The alpha is down performing minus 0.32, and Sharpie and Sortino are very low. It's not even close to 1. Even if it is close to 1, we can accept it, but it is very close to zero point 0.5 and zero point 0.6. And as usual, Motorola sold Nifty 500 holds the number of highest companies, and 53.86 is the return for Nifty small cap 250 holded by Nippon. The NAV is trading at 18.52. Slow. Yeah, that's it for Equitas Small Finance Exide Industry. So Exide Industry, total of 38 funds, and the Excel sheet has been generated for it. So yeah, alpha is 5.85 for ICICI Prudential Value Discovery Fund. So we have came across this fund for more than two to three times, I believe. So that's a good number. Sharpie and Sardino close to 1. Okay, it's acceptable, and that's because it belongs to Nifty 500 valued 50 TRI. And now value for Nippon India Growth, which is the highest, topping the chart of among the 28 funds. Standard deviation is 27.24, which is higher for among this, and Franklin India smaller companies has highest standard deviation. Sharpie and Sortino seems to be into the range for the Tata arbitrage fund. Usually arbitrage fund, as I said before, would be holding the Sharpie and Sortino ratio at this range, and we can ignore the beta, as I said, and the alpha seems to be very low. The standard deviation is very low. It just fluctuate only minus 0.83 or plus 0.83. It's a good one, and 1.33 beta value for Access Equity Saver, which is very high. We can predict the data when the beta is very high. The same impacts the alpha and the Sortino ratio, Sharpie and Sortino. And as usual, the same Motorola sold Nifty 500, also 500, and 35.8% returns for Aditya Birla Sun Life Special Opportunities Fund. The NAV is trading at 15.44, and S&P BSE 500 TRI. These metrics are yet to get calculated, as we don't have enough historical data for it, but we can predict, as it is belong to the same benchmark. The quantum long term also belong to the same benchmark, S&P BSE 500 TRI. We can see that the standard deviation at 21.97. Yeah, you can see that the alpha is minus 4.8 and beta is very close to 1, and a bad Sharpie and Sortino ratio. So we can expect the same for this. But based on the performance and historical data, we can things might change. But as for now, it belongs to the same benchmark. But the company seems to be different. 49 companies has been holded by this fund, and it is 29. That too might be a reason for the low numbers. We can see, take a look on this fund and see the performance in future. So that's it for Exide Industries, and let's move on to the next one, Hindustan Copper Ltd. So if you take a look around the Hindustan Copper, trading at 118, and market cap as at 11,000, and stock P is bit high, 46, and ROC at 6.35. Good pros, has reduced dip. That is a good sign, and expected to give a good quarter. The debtor days has been reduced, as you could see, like from 47 to 34. The cons, yeah, the stock is trading at 6.65 of its book value, and poor sales growth for the past 5 years, low ROE, capitalizing the interest cost. Promoter holding has been decreased. Fundamentally, it is okay. Let's take a look at the number of funds that has been holded. Quant Infrastructure, as usual, and small cap, standard deviation, highest standard deviation. Edelweiss Arbitrage Fund has a highest beta value and Sharpie. So this kind of a in between call, like it has a good standard deviation, fair alpha, but uh, the beta exceeds the threshold. As I said before, when the Sharpie is 2 and the Sortino is 3, this can be ignored. So it is a good move to enter into this fund, Hindustan Copper, Edelweiss Arbitrage Fund, and highest Sortino ratio among uh, all the how many funds? 30 funds is for the Invesco India Arbitrage Fund. From the list of funds, we can see that most of them are arbitrage commodities. Once again, arbitrage commodities. So it's kind of a more like into the securities and debt. As we can see that the beta, the Sharpie and Sortino are a bit high when compared to previous funds. Uh, and finally, the returns is ICICI Prudential Commodities Fund has the highest return of 46.9 percentage. Comes under the benchmark of Nifty Commodities TRI. If you take a look around the Nifty Commodities, it has a good number. The beta is exactly 1 and the Sharpino and Sorti is 1.03 and 1.39 and the alpha at 9. That is a good one. So that's it for Hindustan Copper. Next stock, IRB Infrastructure Developers. So let's take a look at. So it is trading at 232 and the market cap is 14,000 and stock P at 49.3 and ROC at 9.44. It has completely no pros and it has more number of cons. Fundamentally, it's a bit weak. Let's take a look around the mutual funds. Wow, it has been holded by 19 funds, 19 schemes. So I'll just, yeah, man. The Quant Infrastructure Fund, once again, it comes into the list, and a small cap also again into the list, and active fund also again into the list, and Sharpie and Sortino. We can see the list at close to 1 and greater than 1.5. The highest Sortino is for FlexiCap. The highest return is for Nifty India Small Cap 250. So these are all the metrics for IRB infrastructure. If we take a look around the metrics, stock metrics, it is trading at 185, market cap of 5,800. Stock P is good and ROC is a bit low. Almost debt free and it's expected to give a good quarter, healthy dividend payout, deliver poor sales growth and low ROE. Let's take a look around the number of mutual funds. Just hold it by only one from our analysis. Might be some other funds that holds many. Yeah, only the new DSP Natural Resources and New Energy Fund alone from our analysis. So it has a good beta, good alpha and good standard deviation. Sharpie and Sortino is a bit low, but it is close to 0.99. Provides returns of 17.56 and the number of companies holded is 23. Yeah, good one. And so these are all the metrics for Gujarat Mineral Development Fund. And the last one is Balrampur Chini Mills. So let's take a look at so it is trading at 491 and the market cap is 10,000 and stock P is at 21 and ROC at 16.5. Good numbers for Balrampur Chini Mills. And it has a reduced debt and almost debt free. That is a good sign and a good profit growth. Only the sales growth is the only cons for this. Fundamentally, this is a good stock. Let's see the number of mutual funds that has been holded. 36. It's a high. among all the funds. Let's take a look. The alpha is pretty high for Axis Small Cap Fund. It is a good sign, and beta is low. Sharpie and Sortino are in range. 25% of returns, and the NAV at 66. This fund has a good numbers. When we speak about the beta, 1.12 is highest for Edelweiss arbitrage, but if you take a look at the Sharpie and Sortino, this can be ignored. And highest Sortino is for Invesco India arbitrage fund. So yeah, we have the much more numbers of arbitrage fund for the Balrampur Chini mills. And highest standard deviation is, I'm sorry, highest NAV value is 267 for the Aditya Birla Sun Life Dividend Fund, and highest standard deviation for small cap. As usual, Nifty 500, Motilal Oswal. And Nifty Small Cap 250 has the highest returns of 53%. Small Cap 250 TRI comes under the benchmark. Yep. So these are all the metrics for Balrampur Chini Mills. I hope you have got some valuable information about these small cap stocks and my analysis on what all the mutual funds that gets held these 10 small caps and its metrics. That's it for this video. Stay notified for more data.